Intel's stock has tripled year to date, and now it's doing something it basically never does, selling a massive chunk of new shares to fund its comeback. Here's the headline. Intel expanded its stock offering from $150 billion to $200 billion. Priced at $95 a share, a 6.5% discount to Friday's close. Subscribe to Taiwan Tech Pulse. We bring you what Taiwan's own analysts are saying, before Wall Street catches on. Got a Taiwan tech story you want us to cover? Drop it in the comments. That's a huge raise, expected to pull in about $19.7 billion for general corporate purposes. And the market reaction? Shares fell 4% on Monday to close at $97.52, then bounced 0.8% in after-hours trading. That dip is classic dilution fear. More shares out there means each one is worth a little less. But here's the twist, Intel's stock has tripled this year, crushing AMD, Nvidia, and the Philadelphia Semiconductor Index, which is up nearly 75%. So why raise money now? Analysts say the higher stock price makes equity financing much more attractive for Intel's expansion plans. And expansion is exactly what Intel needs, because demand for CPUs from AI agents has actually outstripped its capacity. In July, Intel raised its 2025 capital expenditure forecast from $18 billion to $20 billion. That's real money going into fabs. Now, here's where this gets interesting for anyone watching Nvidia or AMD. Intel is betting big on its 14A process, committing to mass production by 2028. But there's a catch. Intel warned it may shelve that technology if it doesn't win major external customers. And that's a huge red flag for the whole AI hardware supply chain, because if Intel pulls back, the pressure on TSMC's capacity only grows. You see, TSMC is already the go-to foundry for Nvidia, AMD, and Apple, and if Intel doesn't become a real second source, those companies stay fully dependent on one Taiwanese supplier. That's a concentration risk every investor in AI hardware should be tracking. But here's the intriguing part, Tesla is already a customer for Intel's 14A process. So Intel isn't starting from zero, it's got a marquee name signed up. And then there's the political wildcard. President Trump said Apple would use Intel-made processors. But neither Intel nor Apple has confirmed that. If that ever becomes real, it could reshape the foundry landscape, but right now, it's just a statement, not a contract. So what's the takeaway for you? Intel's stock surge is partially a bet on its foundry turnaround. And this $200 billion offering is how it plans to fund that bet. But the risk is clear. If Intel's 14A doesn't win enough external customers, they might shelve it, and that would leave TSMC as the only game in town. For Nvidia and AMD investors, that's a supply chain vulnerability you can't ignore. For Tesla watchers, it's a sign that Intel might actually have a shot. Either way, this is a story that's going to keep moving, and we'll be tracking it from Taipei where the chip supply chain lives. If you found this useful, hit that like button and subscribe. We're here every week with the Taiwan angle you won't see on US Financial TV.